Hello, active traders, and welcome to another episode of Trading Week Ahead. I'm Ken Calhoun, your host, president and founder of the original Day Trading University and TradeMastery.com. As always, all information is for educational use only. So let's start by taking a look at the S&P. You can see that we finally took out and held over the critical 200 SMA line, which we hadn't been over since early December. So that's a critical key support / resistance area to keep an eye on. If the market stays above this, we're likely in good shape. Of course, if it drops under the 2740, we may see some selling pressure with support at the 50 SMA down here at 2600. One other quick tip is you do want to pay attention to your sector charts. Like the insurance sector has one of the strongest chart patterns out there compared to others, for example, like the biotech. That's kind of choppy, sideways, just very slightly up. Banking is modestly strong, but the insurance sector chart is the best of the bunch. So when it comes to scanning for strong charts, you can drill down by starting with your S&P chart and then comparing relative strength of some of the individual sector charts and then locate stocks within the sectors that make sense. Now this episode is brought to you by, just a quick note here for my live TradingTheOpen.com trading room. We've got a special until February 21st, which is just this upcoming Thursday. And I never extend my deadline, so if you're watching this after the 21st, never mind this announcement. But we do have a very special offer where you get 6 months of access with me in my live room, 5 days a week, where I'm actually live real money trading in my Fidelity account, and I show you actual wins, stops, and draws every single trading day. So that's at TradingTheOpen.com, TradingTheOpen.com / subscribe 695. So do be sure to register for that. This is a really popular offer. For those of you who have been registering, thanks for your patience. It's taking up to 24 hours to get your GoToWebinar links to you. Anyways, back to the markets. What's going on? Well, one thing you want to pay attention to as well is when you're scanning for charts to trade, look for charts that have nice wide trading ranges or nice clean gap continuation momentum runs in the day prior to your entry. And these are often some of the very strongest, like this one is DAN, the ticker. A small gap that continued from 17.5 up to 1920 would have been great for an intraday trade. It also makes sense for a potential swing trade because of the large green candle on high volume that's broken out above the 200 simple moving average line. And do a similar approach. When you're just randomly scanning through charts, look to see those that have the strongest relative strength with big green candles, large recent volume, the slope of the line that makes sense, and good relative strength. Now, just because the chart had a strong prior day doesn't make it a good candidate for an upcoming, say, week ahead candidate. So far of all of these, the only two I like is this TNDM and DAN. Those are two very strong, relatively strong charts to pay attention to. Now, of course, I cover charts that are worth trading in the live room as well as my swing scans, alert service, and the rest of it. Here's another good one, Tenet Healthcare. You can see THC's gone from a base of around 17 up to a current trading range of 24. Now, my swing scans members get much better charts than these. I'm just going through a random list. Here's a sample pick of the kind of chart that my SwingScans.com members get. ARRY. That's a spectacular chart, and I'll give that to the world. That's one of 10 picks that my Swing Scans members were told about just this past weekend. So anyways, you're looking for charts worth trading. Do look for ones that have continuous uptrends, large green candles on high volume, preferably above all three moving average lines in a 45-degree angle breakout. You have so many great opportunities to trade. And remember, this is the classic #1 pattern in the world, is a previous day up, current day small gap that continues up, and buying right above whole numbers. I never buy right under the whole number. Like I would never buy a 1790, but I would buy an 1820 or so. Anyway, it ran all the way up to 19, which is another good exit target. And a final tip here for the week is trade within whole number trading ranges. Maybe this puts it on the radar for you for a day or a swing trade, and it's starting to break out to new highs. Well, I'll use a buy stop limit order, say buy stop 1820, limit 1830, to get me in on the trade with anywhere from a 20 to 40 cent trailing stop for a day trade, and up to $1.50 or maximum $2 for a swing trade. But usually I'll use a loss of 2-day lows, like 1650 would make sense for a trailing stop for a swing trade. If you entered 1820, your initial stop would be a loss of the most recent 2 days, the current day and the prior day, and maybe 20 cents or so under support. For a day trade, you want to play it much tighter, 20 to 40 cents. Anyway, small gaps like this one that continue on up make for spectacular trading opportunities. And those are the kind of charts that we like to focus on, at least in my live tradingopen.com trading room. So just a reminder, we do have a special. It's 6 months of access. It's over 30 hours of training a month, which is a lot. I'm there for you guys Monday through Friday, 9 till 10:30, trading my own live account with proof. I show screen caps and the actual account window as I'm making live trades, so you can follow along with me as you look over my shoulder. 6 months access, just $6.95. It's just slightly over $100 a month, which is a bargain for all the hours of training you're getting. Over 30 hours a month for just about $100, right? So that's a really good deal. Anyway, that offer expires this coming Thursday, February 21st, and you can get to it by going to www.tradingtheopen.com/subscribe $6.95. There's a video where I tell you a little bit more about the room, an outline of the types of things that we cover, a screen cap of my workstation that we've been looking at here. I'm a real trader with proof. I really trade currently, right, as of 2/2019, right? Thousands of real money trades. So, and also I trade on small size, usually no more than 100 shares. Occasionally I'll do as many as 200 or 300 shares once I've built a position, but I believe in start small and then scale into the winners, not start large and blow up your trading account. It's much smarter to play the field of, I'll trade anywhere from 5 to a dozen charts each morning with small size. So I kind of develop a small portfolio of charts that I'm trading and start off by minimizing the upfront cost for the ones that stop out. And you learn how to do that. Again, I'm a money show speaker. I've been seen in Stocks and Commodities every month. And that is our offer of the month for our live room at Trading the Open. Anyway, back to the charts. What else do we have? So I give you guys this free content, which is valuable and it makes sense and it's smart and it's well developed and it's intelligent. But for access to in-depth, step-by-step training, you really should consider trying out either my live room at tradingtheopen.com or my swing trading service at swingscans.com. Either way, we're looking for nice sustainable patterns. Like here's a stair step where you have a run up that breaks with a large green candle over the 50 SMA, goes sideways, stair steps up again, breaks the 100 SMA. What do you think's next in store for this chart? Well, up, sideways, up would be sideways, and then probably a continuation move up. A quick kind of a final tip here: if the market does sell off, instruments like TVIX and the other inverse ETFs are all likely to bounce. Now, we don't want to buy something that's at a 90-day low because it's likelier to keep going down, right? It could go down to 20 or 15 or something from here. But if it recovers, I'll be trading TVIX for both swing and intraday trades on a multi-day recovery. If it gets over 38, if it gets over 42, if it gets over the moving average lines, this may be good for a nice mean reversion pivot up to the mid-50s at some point. So, in the meantime, though, we want to play strength and focus on the charts that have the best directional strength and the best directional volatility with good buyers in charge. So, anyways, with that, I wanted to thank all of you for your attention. For more, be sure to visit me at trademastery.com. And until next time, trade smart, trade with tight stops, and let's go get them. Best wishes for success. Bye for now.